I'm one very small person now.
Very small person with a big message. We'll get started in just another minute or two. I know folks are still joining us here, so we'll just hang tight for another minute or two, and then we will get going. Well, good afternoon, everyone. I think out of respect for everyone's schedule today, we will go ahead and get started with this webinar. My name is Katie Haas, and I am the Membership Director for the Edwardsville Glen Chamber of Commerce. And I am so grateful for you all joining us and tuning in this afternoon. Thank you for sharing an hour of your time with us. Very excited about the content that we're going to be going over today. Excuse me. You'll notice by this title slide, we are going to be focusing on business relief opportunities that were recently included in the COVID-19 relief bill passed on December 20th, 2020. Specifically, that is going to address hotel and restaurants provisions and relief specifically for hotels and restaurants, shuttered venues, and also relief for landlords. So there's a lot of content to go over in the next 60 minutes together. And thankfully, you don't have to listen to me do that. We have brought in a fantastic expert in Paul Petruska, who is counsel with Greensfelder, Hemker, and Gale. And I'm thrilled to introduce Paul to you guys this afternoon, and want to just kick it off to him and let him take it from here. Thank you again for joining us.
Well, thank you, Katie, very much. And I'm sure everyone is loving this beautiful day, which is perfect to cover the monstrosity that was 2020. And now we're trying to get out of it. We're trying to get out of it because economic experts tell us people are going to be dying to start buying things, start coming to restaurants, going to hotels, traveling. I think we all feel it. We all know it. We just got to get past where we are right now. This bill that was signed into law December 27th, 2020, offers different relief, somewhat different than the first round. So let's jump right in. We'll talk a little bit about the bill quickly. There was $900 billion allocated by Congress to help individuals and businesses. $284 billion allocated to the Paycheck Protection Program. If you're on this meeting, I'm guessing you already got round one, meaning you got a loan earlier in the April-May timeframe, which was called the Paycheck Protection Program. That was a fully forgivable loan. This now is the same program. It's got less money. It was $350 to start in the first round. It's got $284 now, but it's got new rules. Also has new uses, new ways to qualify. So I'm going to cover those. $15 billion in grants for shuttered venue operators. The most depressing thing about the shuttered venue operator is many of you will say, I'm certainly shuttered and I'm a venue, but you may not qualify. This is for specific things, but it's the majority of the questions I'm getting right now in my office. We got $25 billion in rent relief. I don't know if any of you are residential landlords, but this is for residential landlords, and it is amazingly different than the first round, and I'll explain. When I talk about the PPP, which is the first thing I will talk about, that's the Paycheck Protection Program. I'm assuming that you already got the first loan, and it's already been forgiven, because that is what we're going to be talking about here today. If not, you can always contact me later. You'll have my information at the end. And we can talk about how you would qualify under this round if you didn't get the first. But I'm assuming most people got the first. If the first qualification for the PPP is often overlooked, and I'm going to cover this quickly, but 13 CFR section 120.110 sets forth certain businesses that are ineligible. And I think it's important because most people forget this. There's a long list here, and I'm going to talk about life insurance companies and pyramid businesses, and used to be nonprofits were not included, but guess what? They are now. That's the reason I have it highlighted. Businesses principally engaged in teaching, instructing, counseling, indoctrinating religious or religious beliefs. They were not included in round one. They are included in round two. That's the reason I have it highlighted. I only include this screen because I love this description. Businesses that present live performances of a prurient sexual nature or derive directly or indirectly more than de minimis gross revenue through sale of products or services, or the presentation of any depictions or displays of prurient sexual nature. If you have that business, you're also excluded. I don't know how governments come up with these definitions, but that's how they defined basically a strip joint. So the new law allows the following to qualify for the second draw. I already addressed this. Churches and religious groups are now eligible. Housing cooperatives are actually eligible, very specific definition of a housing cooperative. And similar to the first draw, 501c3, 501c19, and travel businesses with less than 500 employees are eligible. So what are some of the differences this time? This time it's not 500 or less, it's 300 or less. That's because the LA Lakers and Ruth's Chris Steakhouse and others qualified under the prior, and they're trying to make sure that doesn't happen again. You must have been in operation on February 15th, 2020. If you were not in operation, you're going to have a problem. And I guess we could play with the word operation. No publicly traded companies, that's new. Sole proprietors and independent contractors are eligible. Why am I bringing this up? Because your corporate formation, the way you have your company set up matters, but it is not, doesn't mean you're eligible or ineligible. You may be an S Corp. You may be a C Corp. You may have your own business under your name. You may have your own business under some other name like Perfect Windows. Whether you are a sole proprietor, meaning no corporate status, an independent contractor, you're building homes, or an S Corp, C Corp, LLC, you're eligible. That's the beauty of this. The key difference this time as opposed to last time. Last time you pretty much just had to swear, I lost some money. This time you have to prove that 1 quarter in 2020 must be at least 25% less in gross receipts compared to the same quarter in 2019. That's vital. I actually have some clients that can't do that, but still have significant losses. That can happen. But that's the qualification right now. 1 quarter in 2020, you must have at least 25% less gross receipts than the same quarter of 2019. How do you get money? Basic calculation. There's a very specific instruction on how to calculate something called the average monthly employee payroll cost multiplied by 2.5 is how much money you can get. So your average monthly payroll costs, and I'll show this in just a second. If you're a regular business, you can take that average monthly cost and multiply it by 2.5, and that's the maximum amount of your PPP loan. Unless you're a Code 72 industry. What is that? I'll show it next screen. If you're Code 72, you get to do the same average monthly payroll costs, but multiply it by 3.5. I can't tell you why they did this other than saying 1 week before this bill passed in December, the Restaurants Act was in the law. Everyone was talking about it. $100 billion for restaurants just disappeared, gone. I think this was kind of the compromise. You can get more money, which is important as a restaurant. You also have new uses. So what is the Code 72? It's from this book. If you want to look it up, the North American Industry Classification System. And this is the definition. Generally speaking, it is hotels and restaurants. If you don't know if you're a Code 72, in this book, like on page 1542, I believe is where this starts. It starts going through all the definitions. You can find it easily on the internet. You can also contact me. But in general, it's accommodations and food services. What things cannot go into average monthly payroll cost? There's a $100,000 cap. A lot of people say, well, what does that mean? Does that mean if I myself as the owner make more than $100,000, I can't include any of my salary? No. It means your salary above the $100,000. So if everyone in your company was making more than $100,000 in 2019, you could use $100,000 for each one of them. That's it. You couldn't include any more in your average monthly payroll cost. You're allowed to include commissions, tips, vacation pay, all leave pay, contributions for growth, health, and retirement, and employee paid state and local taxes. A lot of people ask me, what about the employer's FICA contributions? No. The easiest way to look at this is if you are an employer and you have some benefits that you offer your employees, generally speaking, what this means is you get to, if you have a salary, you get to include their gross pay, the top number on their check, because everything else that you're paying for or they're paying for gets to be included. Excluded, as I said, any tips or commissions above 100. You can't pay your independent contractors. You don't get to include them, I'm sorry. If you have independent contractors rather than employees, meaning a 1099 versus the W-2, you can't use it. And then payments to any employee whose principal residence is outside the US. So here's one example, and it's an easy one. This makes it look simple. If you have a small C Corp, you have 10 employees, all are salaried. One of those employees is the owner. 9 of those employees have a salary of $36,000 per year. That's $3,000 a month. They have some benefits. We don't even have to worry about it because it's all allowed to be included. So basically they're $3,000 gross pay per month. You get to multiply that by 9, you get $72,000. And then let's say the owner was making, you get 9, they have 36, 9 times 3 is 9 times 3 is 27. So 27,000. Then the owner was making 72,000 per year. That's 6,000 per month. You get to include that once. So as I show below, average monthly payroll cost is $3,000 a month times 9 plus 6,000 ends up being $33,000. Then you get to multiply that by your multiplier, 2.5 or 3.5. That's the maximum amount of your loan. Here's where it gets much more difficult. And I'm including this because this is the reason you may need to hire somebody like me, is you don't want to short yourself. But if you're an LLC and you have a bunch of different employees, it may be a little difficult for you to determine what to include. So let's say you're an LLC, you have 10 employees, not including the owner. They're paid hourly. You have 3 managers, they get health benefits. 7 employees get commissions and tips. It's much more complicated. The owner of the LLC would have to look at line 31 of Schedule C of 1040, which basically means your profit. That's your income as the owner of the LLC, assuming you pass through your income. For the other employees, you have to look at the 4 quarterly Form 941s, which are the forms you use to report the income you're paying your employees. Your healthcare costs can be found on line 14 of Schedule C of the 1040. And then we got some division to do to figure out what the monthly is. My point, it can get somewhat complicated, but you don't want to short yourself. Okay, so what is this? This is the current application form as of January 8th. I checked before this presentation, it was still current. This is a form online. It may not be the form you get because banks run this. Remember that. You're going to a banker. You're going to ask for their form. Their form may look slightly different. I'm only including this to give you an example of what you have to do. So this one you see, one section of that form says I got to have my average monthly payroll cost. You put it in. They're relying on you to be honest about this, okay? The bank doesn't have to check it, and the SBA is probably not going to check it. Certainly, anytime you want to get a free loan or free money, you probably want to make sure you're accurate on that. But just to make sure this is your number, you're putting it in. They have your tax returns to see if it's accurate. You can then multiply it by the number of employees, and then you can show what you're going to use this for. I'm not a big fan of this pre-disclosing what you're going to use it for. I think you just list it as payroll costs or check them all, because that has to do with forgiveness, and we'll talk about it. I put this screen up. I'm not even going to read it. Everyone can get this presentation if you want it. Just wanted to show you these are things that will rule you out. Things such as you had a felony, you didn't pay prior loans, and other issues. Again, this is a screen. Anyone can get this after we're done with this presentation. Allowable uses of PPP funds. This is what gets back to, I keep calling this a loan, but you know what? It's a forgivable loan. That means you don't pay it back if you use the money correctly. You were allowed in round one to pay your employees. You were allowed to continue their benefits. You were allowed to pay your mortgage interest or rent. You were allowed to pay a utility payment, and you were allowed to pay some interest on pre-COVID debt. That was your only uses that you were allowed to use before. We have new ones now. We have the covered operation expenditures, the covered supplier costs, covered worker protection expenditures. What are those? This one, I'm not going to read it. Very long. It's basically a quote. It's software. You can buy new software, basically HR software. You may want to buy this, and you may want to include it as your cost, because if you got to do this again, and we know another round's coming, it would be great to have software that makes it easy for you to do it. The covered supplier cost is an expenditure made by an entity to a supplier of goods for a supply of goods that are essential to the business. Some of you have been buying inventory because you're required to buy it. In the past, you weren't allowed to use that as an expense. You can now. More importantly, for restaurants, perishable goods are considered a covered supplier cost. And it's allowing you to use those covered supplier costs from both prior to the time you applied for the loan and after you applied for the loan. I'm praying that we don't have additional shutdowns. I'm praying that you don't have any perishable goods that get destroyed that you can't sell. If they do happen, you can cover that expense and still have your loan be forgivable. Then you have the covered worker protection expenditures. This is vital for restaurants and some others. These are new costs that you're allowed to include. You can actually put in a drive-through window. You can change your ventilation system, and this is vital. I've been talking to a lot of restaurants about this. All of you got shut down. Many filed lawsuits. Almost every one of those lawsuits got rejected. Almost everyone, especially here in Missouri, for a variety of reasons. One of the arguments you may be able to make in the future, if this were to occur again, and let's never believe it can't occur again, is if you have a new HVAC system that can change your air 6 times per hour, I have a mechanical engineer that will say your restaurant is much safer than others. If you have higher than 10-foot ceilings, you can put UV light in the upper part of the ceiling. Well, no human will be up there. That UV light will kill the virus. Air circulates. It will kill the virus. You could put something like that if you have high enough ceilings. These are expenses that maybe you might, if you say, I don't really need this money, my drive-through or my pre-orders have been okay. I don't necessarily need a loan. I'm going to encourage you to get this loan and do this kind of stuff. Prepare yourself for the next time. It's free money if you use it right, okay? This is one of the things you can use it for. You also can install physical barriers, sneeze guards, personal protective equipment, etc. Those are new uses, and they're very helpful. Forgiveness. New formula to determine how much of the loan is forgivable. Last time it had to do with, basically you had to bring back all your employees. Interesting feature in round one. By the time, over here in Missouri, by the time the loan came through, everyone was back in business to some extent. Most of their employees were back, and they're like, well, wait a minute. I got this money to pay them, and now I have to pay them. That's the key thing to understand about forgiveness. You're basically getting a chunk of change, and you have to account for it the right way. If your employees all are working, you can now say, I'm using this money to pay those employees. Your money that you were paying them is now other money that you can use. I'm not talking about lying. This is not lying. This is talking about how you use the funds. You have a bucket of funds over here that is your money, a bucket of funds of PPP. You get to decide how you're allocating it. 60% of your allocation must be for employee payroll. Must be. Then the full loan can be forgivable. This is the form that's out there right now. You can see a variety of things showing how you use the form. I recommend that you look for this on the SBA site, or you can grab my presentation and see it. This is something you want to fill out before you get your money to make sure you're going to be able to get what you want to get out of this. Some of you just need money, right? I just need money. I'm desperate. You're going to get the loan no matter what. But this will show you how you're going to make it forgivable. And I really don't want anyone to get this loan and not have it be forgivable. So look at this before. Fill it out a little bit. Make sure you're going to be able to get forgiveness. Now I'm going to take a second just to see if there's any questions. Take a drink.
There's a question.
Okay,
There's
please.
a question, Paul. Good day. This is Al Canal from the Wildry Theater. Sorry if I pronounced that incorrectly. We are owned and operated by the city of Edwardsville. We have been told that some government venues may be eligible. I do not see any guidelines to tell if we qualify. Do you know what the guidelines for a venue like ours are?
Yes, I do know those guidelines, and they will be coming up in the Shuttered Venue Operator. I'm assuming when you said that you were a venue, you're a live performance type venue or something like that. If you are a restaurant and you're state owned, I believe you would not qualify. You would not qualify for the PPP. I would like to check that, but I don't think your question really relates to that. I think your question relates to the Shuttered Venue Operator, and I will get to that. But state entities or state-owned entities are allowed to apply for an SVO, Shuttered Venue Operator loan. Did you have any other questions?
No.
Okay. This is the Economic Injury Disaster Loan. I'm throwing it in. I don't think any of you want it right now. It's not bad. If you can't qualify for the PPP, you can get this loan. It's 30 years, 3.75% fixed interest, 1 year deferred. So you get some money. You don't have to pay it right now. Hopefully your business is back and booming, and you can pay off this loan over 30 years. That's what the Economic Injury Disaster Loan is. It's the same thing as when there's a hurricane or an earthquake and businesses have to apply for some money. This is what they do. All they did is they made it available for everyone that is economically impacted by COVID. This one, language is important in case you look this up. There's something called an EIDL, Economic Injury Disaster. EIDL advance, there's a targeted advance, and there's a loan. So I don't want you to get confused if you're online and you say, wait a minute, the advance is gone, I can't get anything. No. The EIDL advance was $10,000 in the first round of this funding. It was a grant. The first $10,000 of whatever amount you asked for, up to $2 million, was free. You didn't have to pay it back. That's gone. It's been funded. It's done. They have a new one. It's a targeted advance. That only applies to certain entities. And that's kind of long-winded. I didn't want to have to cover it here today. But there is a targeted advance, which again would be a grant. And the new maximum for the EIDL is now $150,000 because there was such a demand last time. So they made the maximum amount of this loan $150,000. As I said, 30 years, 3.75%, 1 year deferred. How much can I get? Well, I just told you $150,000 is your max. Unlike the PPP, there isn't a clear explanation as to how much you can get for your business because it's a loan. What's going to happen is you're going to fill this out online. It's 5 pages. Those 5 pages take about an hour and a half to fill out all the information. And then someone will contact you and they'll say, this is what you qualify for. This $250,000, as I said, was reduced. How to apply, I gave you the link here. Once you go to that link, you click on the box that says apply here. And boom, you're applying for the economic injury disaster. Before I get into the shuttered venue, I just want to see, was there any other questions asked? Okay.
No, but Al did follow up and say it is about the SVEOG grant, and we do live performance shows.
Yes, okay, good. So that's what we're on now, Al. This is the Shuttered Venue Operator Grant. $15 billion total. $2 billion set aside for venues with fewer than 50 full-time employees. In a very general sense, this isn't every venue that's shut down. It's for theaters, museums, zoos, live performance venues that saw a 25% reduction in revenue are eligible. If you are somehow a live performance venue and you didn't have a 25% reduction in value in gross receipts, I want to talk to you because you did something amazing. I don't know how you got a bunch of people into a live performance venue. So I think that should be easy, the 25% reduction. However, this grant, and it's a grant, it's not a loan. This grant is a pain. The way I describe it is you have to check the boxes, and there are a lot of boxes. And if you can't check one of the boxes, you get excluded. To some extent, it stinks. But if you can check all the boxes, and I believe in a lot of circumstances, most people are going to be able to check the boxes if you're a live performance venue, then you can get it. The key thing here is you can't get your second draw PPP, the thing I talked about in the beginning. You can't get it. So you must wait. This isn't even available yet. You must wait for this. Make sure you get this. And if you don't, you got to go back for the PPP and hope it's still available. I apologize. I didn't do that. They did. What is an eligible SVO, Shuttered Venue Operator? It's a live venue operator or a promoter. It's a theatrical producer. It's a live performing arts operator. So let's back up a second. What if you're a choir? What if you are a moving group of actors? You probably fit as a live performance art operator, and you don't fit as a live venue operator. They're different. Certain museums, zoos, and aquariums, motion picture theaters, talent representatives, all of those are eligible. Here's the catch. They're very specifically defined. Each SVO on the previous slide must meet the specific definition. One particular requirement that's difficult for some as opposed to others is the 70% earned revenue. Okay, so what does that mean? If you are a live venue operator and you have a lot of different businesses in that live venue, 70% of your income must be related to what they consider live venue operator money. Example, I use Pops as my example because it's a bar and it has concerts all the time. Where does it fit? Well, Pops has to show that 70% of their earned revenue is generated through the live performances as opposed to the bar. However, the food and beer from the live performance is included. It's connected to the live performance. So this is a little bit of an accounting issue. And this is where I'm going to try something new. I didn't try this the last time I did this. I'm going to actually show you the live performance venue definition just so you get how difficult this can be. Okay. This is from the law itself. And this is step one of determining whether you are a live venue operator. Al, this is something you want to take a look at. So they're trying to, in this case, explain the characteristics. This is not even the definition. This is just the characteristics. So live venue operator, and I'll skip the rest, would have okay, there you go. A defined performance or audience space. If you're a restaurant, you don't really have a stage. As long as you have a space that fits as a performance space, you can just mark it off. You'll fit that. Do you have mixing equipment, public address system, lighting rig? These are characteristics. You don't need to check every box here. These are just characteristics. Engages one or more of the individuals to carry out not less than two of the following: a sound engineer, a booker, a promoter, a stage manager, security personnel, box office manager. Again, characteristics. Is there a paid ticket or cover charge to attend most performances? This is kind of vital because a lot of times you may not be charging anything, but if you have a cover charge, not a ticket, but a cover charge, you at least fit that characteristics. Also, the artist must be paid in some manner. Doesn't mean they get a percentage of the revenue generated. It could just be a contract. You paid him $600 to show up. For a venue operator or operator by a nonprofit entity that produces free events, the events are produced and managed primarily by paid employees, not by volunteers. Again, it's a characteristic. Performances are marked through listings in printed or electronic publications on websites, by mass email or social media, okay? Those are the characteristics. Then we got to go to this section to get to the definition of a live venue. And I'm showing you this because this is where you're going to run into problems. I think for someone that's close, you look at the characteristics and you say, I meet many of these. I'm operating in good faith, okay? I'm operating in good faith. I meet many of those, and I think I check most of these boxes. I'm not positive, but I think I do. In my world, that's gonna work. They really do want to give this money to live venue operators. The problem is if you literally can't check a box without lying, you're gonna get yourself in trouble. This will be audited. So let's look at the boxes you gotta check. The term live venue operator or promoter, theatrical producer, or live performing arts organization operator is an individual or entity that has a principal business activity, organizes, promotes, produces, manages, or hosts live concerts, comedy shows, theatrical productions, or other events by performing artists. So Al had said we have live performances. It pretty much doesn't matter what those live performances are, Al, as long as they aren't the pure sexual thing we talked about earlier. You must have a cover charge through ticketing or front door entrance fee is applied, and it has the word "and," so we also have to have this. Performers must be paid an amount that's based on a percentage of sales, a guarantee in writing or standard contract, or another mutually beneficial formal agreement. You always like those additional ones that's kind of vague like that. That helps you. And, so you got to meet this one too. Another box you got to check. For which not less than 70% of earned revenue of the individual or entity is generated through, to the extent related to a live event described in 1, cover charges. So these are the things that you must be part of the 70% related to the live. Cover charges, ticket sales, production fees, production reimbursements, nonprofit educational initiatives, sale of event beverages, food, or merchandise. All of that can be included in your gross revenue, and your gross revenue must be 70%. 70% of your gross revenue must be from this. So, Al, if you are a venue that has live performances, and all of your revenue comes from those live performances, including things you sell during the live performances, you're going to be okay. You're going to fit this. As long as you have some ticket sales, you have some earned revenue from all of this. The other part that may come up is you're a not-for-profit. That's where we get back to this thing earlier. Let's go up. When it talked about for educational initiatives, I think that's how we can shove in some fundraising. So that is a very long definition of what a live performance operator is. And I'm going to get out of that and go back to this. My point in showing you that is not to cause you concern, and not to, let me get my PowerPoint back up. My point in showing you that is not to get you concerned and not to say that I'll never qualify. I don't want anyone leaving this thing saying, okay, I'm stuck, I can't do anything. No. What I wanted to do was show you that there may be a reason to hire someone like me, and I'll explain later how we do that and I make it affordable. I'm not trying, just for everyone on this, I am not trying to make my living being a PPP lawyer. It's going to be gone in a year. I'm not trying to become rich off people that desperately need money, but I do need to have some form of being able to offer advice. I have to have agreements. Ethically, I have to do that. And I will talk about that at the end. But there are reasons that you may want to check with someone like me as to whether you qualify. So this, I actually had this slide in here as of last night, didn't change it. But guess what? The law changed. Now, law didn't change, SBA changed it. So let's look at this. What if a shuttered venue had 0 earned revenue in 2019? That's another box you had to check. You had to have some, the law specifically says to determine if you have 25% less, it only allows you to check your earned revenue compared to 2019. That's what the law says. So I had this screen up, I had this slide in here saying that the SVO, sorry, you're out of luck. If you have nothing from 2019, you can't show the 25%, you can't check that box, you're ineligible. That's how this was supposed to work, but guess what? January 27th, 2021, update by the SBA. Frequently asked questions. This is how complicated this can get. This is not a change in the law. This is not a new regulation. This is just an answered question. And someone said, is an entity that was not in business in 2019, but fully operational on February 29, 2020, which is the date for the Shuttered Venue Operator Grant, can they apply? The answer is yes. I just told you a second ago that was no. Well, that changed. January 27th, it changed. Yes, if an entity was not in business during 2019, but was fully operational on February 29th, 2020, It is eligible to apply if it can show the required level of revenue loss. In situations like this, the SBA will use an alternative method for demonstrating revenue loss based on the approach the agency is using with the PPP. So in other words, you can compare your 2020 revenue loss to your first quarter of 2020. As I said, the law doesn't allow this. SBA said we will. I'm raising all of that stuff because shuttered venues have had almost no revenue for most of 2020, and they're looking to get this grant. And I'm telling you, you can't lie, but you can stretch things. They want to give you this money. You can take vague wording and use it to your advantage. I'm recommending to every one of my SVOs that I'm working with right now, wait for the form. Don't say I'm not allowed yet based on something I told you today. There's gonna be a form, and that form is gonna have certain things. And if it allows you to apply, even though you don't think you may not qualify, if the form allows you to do it, I want you to do it. And if you hire me, you also then have a lawyer who's advised you how to do it, and it does help in that regard. Certain characteristics will automatically exclude an applicant. If an SVO has or is owned by an entity that has securities listed on the National Security Exchange, you're not eligible. Al, that's not you, you're owned by the state. If SVO has 10% of gross revenue from federal funding during 2019, you're ineligible. I don't know if that applies to you. 10% of your gross revenue from federal funding in 2019, all of a sudden you can't get this. If the SVO has 2 or more of the following, hopefully this doesn't apply. Do you own venues in more than one country? Do you own venues in more than 10 states? Did you employ more than 500 employees as of February 29, 2020? Then you're not an SVO. That's, again, more boxes you have to check. And then the purient sexual nature thing again. If the SVO was in operation on January 1, 2019, it may apply for an amount equal to 45% of the gross earned revenue for 2019. Think about that. Compare that to your PPP. 45% of your gross earned revenue from 2019 is what you can apply for. And it's free money. It's a grant. This is a great program. If the SVO was not in operation on January 1, 2019, then the formula is the average monthly gross revenue earned for each full month of operation in 2019 multiplied by 6, but no higher than 10 million. I know, it's a little complicated. This is another thing that you have to be aware of is there are unique timing for this grant. And they did this because a lot of shuttered venues literally have no revenue. They have a 90% loss in 2020. Well, you get to go first. What's going to happen is once this is open, everyone's going to apply. No one is going to get a loan in the first 14 days, I'm sorry, grant, unless you could meet this first paragraph here, this one. During the first 14 days, grants will only be given to those SVOs who 4/1/2020 to 12/31/2020 revenue is not more than 10% of the same period of 2019. In other words, 90% loss, at least 90% loss for those months of 2020. That shouldn't be that hard to calculate. During the next 14 days, the other applications will be processed, and now those SVOs for that same time period that have not more than 30% of the same of their revenue for the same period of 2019. So in other words, a 70% loss, at least a 70% loss. They now get their grants. After the first 28 days, anyone else that didn't have a 70% loss will get their grants, assuming you qualify. And if there's still money left after all of that, those SVOs, Shuttered Venue Operators, that suffered a 70% loss can get supplemental funding equal to 50% of the first application. So incredibly complicated, can be very hard to determine if you apply or can't apply. However, it's a great program if you do. And I will tell you, this is a result of lobbying by various industry groups that put this law together and got it in there. And I think it's as highly defined as it is because they were trying to protect their own. And they wanted to make sure it's only their own. This grant can be used for almost anything: payroll costs, rent, utility, interest on debt prior to February 15th, 2020, worker protection expenditures, payments to independent contractors. A lot of live venue operators are going to have lots of independent contractors. Well, you can pay them now. And certain other specific business expenses set out in the law. Before I move on to this one, are there any other questions?
There's a note here about from Desiree. Just to clarify, the theater that Al references is owned by the municipality, not the state. Does that change anything? Still
No.
government-owned property, but want to verify state-owned versus city-owned. Many thanks.
Yeah, the municipality-owned is still okay. There is a provision in the law about state-owned, and state-owned will include municipal-owned. Let's see. We'll have a little bit of time. We'll check that. I have the law pulled up behind this. We'll check that before we end this program. 25, the emergency rent. I'm sorry, any other questions on that one?
No.
Okay. The emergency rent arrears program. This was already done in round one for landlords. And actually, the landlords got no relief because it was only the renters that could apply, and the renters couldn't be evicted. So some renters wouldn't apply. Some renters didn't know how to apply. Some renters couldn't figure out where to go. The landlords had almost no ability to help themselves, and they couldn't evict anybody. This one I'm trying to educate as many people as I can. Residential landlords now have a right to get some money. So this is $25 billion allocated, and we expect another 25 soon. Money was given to the Department of Treasury. The Department of Treasury quickly said, by January 12th, I need states and local municipalities to apply for this money. The local jurisdictions could be a city or county, but it must have a population of 200,000 or above. Madison County qualified, and it did apply. In fact, it got $7,800,000 for rent relief. The new relief bill expressly allows landlords to apply for the renter, for the tenant. How? A lot of people say, wait a minute, last time it did not allow me to do that. Well, there's a form. They're still working on it. And once that form is out, I can tell you there's probably going to be 3 things on that form for the landlords besides proving that the tenant has not paid the rent, okay? Besides that. Number 1, it's probably going to say that you need to guarantee that the money you're going to get from this will be used to satisfy their rent obligation. Number 2, you're going to have to be able to have the renter tenant sign the form to show that they know this is happening, that you're not just doing it on your own. And 3, you're going to have to promise that you're sending them a copy of it once you do file it. Those are 3 things that will certainly be on the form. This is the law from the new law. This is the language. As you can see, application for assistance by landlords and owners. Nothing in this section shall preclude a landlord or owner of a residential dwelling from assisting a renter of such dwelling in applying, or B, applying for such assistance on behalf of a renter of such dwelling. I spoke with Andrew Esping, the program coordinator in Madison County for this. He's well aware of this law change. He's well aware that landlords can apply, and he's well aware that he needs to modify his form, and he's doing that. He's working on it. He's got a form right now. He's trying to finalize it. He's a bit understaffed to accept all the applications, so he's talking to the various groups that landlords typically don't like, those groups that typically help the renters avoid eviction. He's trying to get them to help process these applications by renters. He's also trying to make sure that the local municipalities accept the application, so it's not all going through Madison County. So there's still some unanswered questions here about how it's going to play. But it looks like if you're a landlord in, say, Edwardsville, you will go to Edwardsville to ask them what forms they're going to have or how they're going to run the application. If you're in Glen Carbon, you're going to go to Glen Carbon. It's not going to all go through Andrew. You can get past rent for 6 months, and you can even possibly get 3 months of rent in the future for the renter under the new law. Generally speaking, that's restricted to 3 months. It's talking about whether they've been unemployed for at least 90 days or other things like that. What's coming next? President Biden right now is proposing 1.9 trillion in new relief. Changes are highly likely, as we all know. The last law was out there for a long time, then got changed. And what we ended up with was almost nothing like the first one. I think it was 3.2 trillion, ended up at 900 billion. This one's at 1.9 right now. What's in it? I'm just telling you so you can kind of guess. There's more money for the PPP. So those of you that are in the shuttered venue operator area, and you're saying, boy, I really don't want to lose out on the PPP, but I'm not sure if I'm going to get the SVO and I may have to wait. If you miss out, hopefully, the next round will also have a PPP if they run out of it this time. They're also talking about a small business grant fund. Let's say you're not alive, say you don't fit the shuttered venue. You weren't around in 2019, you're not available for the PPP, things like that. There may be another grant program, in this next round. And it seems clear they're gonna have another 25 billion in rent assistance because everyone's afraid of the massive amount of evictions that may occur for renters that haven't been able to pay for 5 months. For those of you that want to contact me, you can use your phone to view the QR code. That will allow you to follow me on LinkedIn. I will have an article coming out very soon about the rent relief. I will probably have an article coming out very soon about the shuttered venue. I'm going to wait until it's actually up before I do that one because I expect changes. Like I said, there was just a change on January 27th. My email is in here, my LinkedIn and my work number, which typically, if I'm doing my job right, and I said it, will go to my cell phone if it's after hours. So you can call that number and it should reach me. I'm asking you all to at least follow me on LinkedIn if you're interested in following what's happening. I will update things as they occur. Let's go back to that. Well, while I'm doing it, are there any other questions that came through the chat?
Desiree says, is there any relief on the horizon for commercial landlords?
So the only relief right now for a commercial landlord is the, hold on one second, is under the EIDL, which we talked about. The EIDL will allow you to seek past rent. And that's what landlords were using a lot the first time around. But that right now is the only relief that I am aware of for commercial landlords. So, but please realize, if you can still get an EIDL and a PPP, you can still get an EIDL for your landlord service. If you're a shuttered venue and you have two separate companies, you can get the EIDL for the landlord, commercial landlord, and you can get the shuttered venue. So don't think that you're automatically excluded if, don't think you're automatically excluded if you can't apply for the PPP or anything else. So a commercial landlord does have an EIDL available to them to some extent. So let me go back to this, try to share my screen. Where'd that go? 1 second, share screen. There we go. Okay. So the question was shuttered venue operators in states and municipalities. Let's see. Oh, by the way, for everyone else on this presentation, unless you have another question, you don't need to sit around to find out this answer. I am done with my presentation. We are going to email this to Katie when we're done, so she can email it to you if you want it. I also, as I said, you can follow me on LinkedIn to get additional information. You can also email me, you can contact me. But for right now, for Al and Desiree, let's take a look at this state thing. I'm sorry I have to read through it, but I don't know exactly where it says state. So let me see.
Paul, while you're reading, I also just take a quick moment to remind everybody that next week on February the 10th, we are going to be having another webinar specifically focused on employment challenges that are kind of still remaining and still trying to be figured out as a result of COVID-19 impact on employers. So if you have additional concerns about some of the employment challenges that you maybe haven't faced yet, but might be facing in the future, next, I think it's Wednesday, February 10th, 1 o'clock, Scott Cruz will be sharing information on that. So just wanted to send you all a reminder on that. Thank you.
And for all of you, Scott Cruz works in my firm. He's fabulous. You'll get a lot of good information if you need it for his presentation. Okay. Okay, we're still going through characteristics of the different organizations. Oh, here we go. For purpose of applying the characteristics described in subclause 1, 2, and 3 to an entity owned by a state or political subdivision of a state, the relevant entity. So this is state, and political subdivision is a municipality. It doesn't define it that way, but again, we are allowed to interpret this in the ways that make the most sense. The Congress knows how to define things. If they want to define things to be crystal clear, they can, and they elected not to define political subdivision. It takes its logical meaning. That's a municipality. Okay, so this section says that if you're owned, you shall be a live venue operator, promoter, theatrical producer, live performing arts organization. Okay, so you must be those things even though you're owned by the municipality. Shall not include entities of the state or political subdivision other than the live venue operator or promoter. And that's it. So basically, yeah, the state and municipal owned, everything I said still applies. And that I'm relying on this language right here. Again, if you have any concern about that, the way I'm doing these things is I'm charging a $285 1 hour fee. That's my hourly rate to advise people and to make sure that they get what they're entitled to. I generally will not charge more because I know this stuff. I don't have to really spend a lot of time doing this. So it's a very flat rate situation. I ask for that money up front and then we get all this. But for someone applying for this, if you want to avoid an audit and getting in trouble, you can get an email from a lawyer saying, I read this, I interpreted it this way, and I think it's well worth the money. So if there's any other questions, let me know. Otherwise, I hope everyone has a better day than this gray, disgusting day we're having.
Thank you again, Paul. I really appreciate you sharing your expertise with us today. And thank you again for those who joined us online. Thank you for being very generous with your information. Certainly, we will do everything we can to share it to anyone who is not able to tune in live today, and look forward to hearing from Scott next week as well. So thank you so much.
Thank you, everybody. Bye-bye.